Good evening, guys. It is Sterling here with the daily market preview for June the 28th, 2019. As I mentioned last week, just doing a few more text previews this week as I'm working on wrapping up the course. Next week will be the last week where I'm going to do a bit more text previews. What I'll probably do next week is start the week with a video and then end the week with a video. And I'm hoping to have the majority of the course revision or course add-on, whatever I end up calling it. Hope I'm going to have most of that done by the end of next week. So it's kind of the last push into it, and doing a text preview does save quite a bit of time. Gives me at least another hour a day to kind of work on it and not have to break what I'm doing. So I appreciate you guys understanding there. We'll be back to normal after next week, and I think you'll really like the course update as well. So going into today, we had 1350 as a lower level. We came into that level, had a nice stop run and confirmation up off that point, but it was outside of tradable hours. Therefore, for me, that would not be a valid stop run. Now, I got the question of whether or not you can take the entry after the 2 o'clock open. And the answer is no, unless you see it re-break the level and confirm again. The reason I don't trust the original break is because I don't trust the original break because of the fact that if we view a manipulation point as an area of higher liquidity at that time, then I want to see what the European session really wants to do with that liquidity, or really wants to do with that test of higher prices or test of lower prices. And if that's done prior to the start of the session, well, I don't know if the European session is going to agree with that. So that's why I only trade starting with 2 a.m. on. And again, if the confirmation candle's already occurred, then as far as candle count goes, remember that the break is valid. This is fine to happen beforehand. So you can get the initial break here. It breaks down, breaks by over 2 pips on a smaller ADR. You might allow for a 2-pip break. That confirms up. So at that point, the count is locked. That's your second candle in the count. The third candle here is this is actually the 145 candle. This is the 2 a.m. candle. That's the first candle that starts the European session. So that candle would have to have came in, re-broke the level by at least the required, in the case of the euro, I'd say 2 pips or larger at this point. Re-break it and confirm, and if that happened, then you have a stop run and confirmation during valid hours, all within a valid candle count at that point as well, and again a valid confirmation should that occur. So it could have still produced a setup, it didn't. So no trade there, and quite frankly, you had a very boring day on the euro. Overall high to low, at least thus far, was 33 pips. So a very tame day so far, not really a whole lot going on. Alright, as far as today is concerned, I'm going to keep the euro pretty much the same. The lower level, I'll talk through a couple of these levels, but the lower level is pretty straightforward. At 1350, it's the first low, again, pretty obvious point. 1313 is the next point that we're going to run into to the downside should we work our way down, and tomorrow's ADR is going to be 62 pips, so it'll be down a little bit further. Starting out the day right here, again, depending on where we close. But if you look at that level, it's not a terrible point. There was quite a few tests around that level, and it's likely, depending on where the ADR is, likely you'll be beyond the ADR, or at least close to it by the time you come in and touch that level. As far as anything beyond that point, you do have a decent level here. This is not a bad point, especially the next day, but these levels, and really levels like these, they start to fade in how much I value those points. They start to fade as time goes on, so I'd want a few things to be in favor of it, such as, again, maybe it's past the ADR, or which this one would be, or maybe it's got some supporting factors with being around a psychological barrier, whatever it might be as far as that goes. And again, I think, the 1273 level has the fact that it'd be well beyond the ADR, number one, but number two, that'd be 74, so be well beyond the ADR by the time we get there, but number two, there's really nothing else around it from just the perspective of, what's the next stopping point if the price were to get down to that level. and thinking about the other side of the market. What's the point at which the other side of the market might consider stepping in if the price is falling, which it's going to have to do to get to that level. And that's another kind of way to view liquidity, because you're really not looking at, okay, on the long side of the market, where's a trader likely setting stops. I don't think that represents that level very well. Honestly, I don't know what type of trader would focus on that point. Your longer term traders focus on your larger swing points. Shorter term traders on your shorter term previous day's high, previous day's low. But those points that are in between, that's where you have to be a little bit more careful with, and why with those points a lot of times you'll see me not use them unless you have a cycle bias behind it, something like that, or you're extended beyond the ADR. Again, something just supporting it, maybe nothing else in the area, is kind of the case with these 2 points. So they're not huge levels necessarily, but those are going to be our listed points to the downside, with definitely the first point being, to me, the best of the options really here today on the Euro, as far as lower levels are concerned. The upper points of one spot 1411, one spot 1446, those both stay in place here today. Those are pretty obvious points. 1411's the overall highs here, and then you have your overall highs from March 21st, I believe it was, at 46, and that is, if I zoom out to say the daily, this will probably show it better, just these highs right here. Big upper levels. So the first 2 upper points are big. The first lower level is pretty decent. I think the weakest of these 5 listed levels will be the 2 deepest lower levels, with kind of the weakest one being that midpoint. Because at least with the deepest of all the levels, you have some heavy extension beyond the ADR if it is going to get to that point. So anyways, that's the rundown of my thoughts on the Euro. If we go ahead and take a look at the pound here today, if we maybe go to the hourly first, I had this 25 to 65% range laid out. So as far as yesterday's levels were concerned, what I liked about the push is that this push started on a stop run. I always prefer, and it just visually to me looks better when that move starts with a stop run of a previous high, gives the first push down. This level is the only one within the 25 to 65% retracement area that was worth anything. And then when we came into it, we opened and closed above it with 2 consecutive candles, which would have tossed out your standard confirmation entry. That's a good type of situation where I'm going to look for a more aggressive, the more aggressive style entry, where I'm looking at essentially what is a first failure point, or a breach of the first failure point, or what I define as the first failure point. And essentially, if you have an upper manipulation point, you're going to have to move up to get into an upper level. You can't move down to get into an upper manipulation point. So when the market is moving up, it is going to be creating higher highs and higher lows. That's just a basic fact. If it's creating higher highs and higher lows, what I deem as the first failure point meaning first point at which the move up, that short-term move up right now, fails, is where we break and set the first sequence then of what is a lower low. You don't know that's going to be a lower low until it actually breaks. Then you have your first sequence of lower lows, lower highs. When we retest that point, I will look at taking a first touch entry there, because the stop run has already been shown here. And the only reason I'm taking it there is not because it's another stop run, but because it now offers a situation where I can set my risk off of. Gives me an exact point to risk off of, and it's not a bad second chance entry. Much more aggressive and discretionary. In this case, missed my pullback point by a few pips. So there was no entry there for me on that one either, but I thought it was a decent example of that, and something that again, just kind of wanted to illustrate. Once I get this course revision done, I have been considering making somewhat of a more advanced market manipulation course covering things like that, but I'll keep you guys in the loop as I get closer to that. As you can see though, you've gone 2 days without continuing the move down. This move has been a total of 64, 65 pips. So again, for me, it's a good, I think you're probably still going to see some movement to the downside, but because you've gone sideways for 2 days, officially I have to open the bias up. So with an open bias, We can still trade the pound, and I do still want to stick with the pound because we have some really big levels. This low is in a substantial level. The last high that we had set's a very obvious upper point right here. Again, nice solid point there at 24. Actually, I think we might be able to round that down to 23. We can. So it's a big level there, 2783, a big upper point, and to the downside, if we look at our deepest point, that goes back to the lows from the 21st, which is at 2647. So you have some big points there, and taking a look at, say, let's go out to the 4-hour here, maybe shows this a little bit better. You can see that, you know, those points, there's really nothing else around them. So as far as today is concerned, once we get below this low, your next point's 150 pips away. I would definitely look at using the absolute overall lows. It's just unlikely you're going to get there. That makes 2647 a really nice point because you might even have a backside opportunity off of it if the market is going to move down. That potential's there. And the two upper points are solid as well. So open bias here today. Again, the deepest of the upper points, 2783. You'll notice there's nothing else beyond that. So that is the last and final upper point, and that'll do it here for today's daily market preview. I'll see you guys back Monday. Have a great last trading day. Again, see you back on Monday. Until then, happy trading.